Okay. Yes, we are now recording. We are live. Right? So the past few days, I have been reading over the conceptual framework. You will see it in the UJ slides. I have sent them. I will send them again for any newcomers. All right? But as important as the conceptual framework is, we came to the conclusion that it is not a standard, as you can see on the slides. Standards come first. We will learn about standards, but what you should know is as much as the IASB, which is the board, as much as they need the conceptual framework to create lucrative IFRS, right? Standards come before the conceptual framework. Point blank, period. Okay? Does that make sense? I'm carrying on. We've done this before. Okay? General purpose financial reports. Okay? These are your financial statements. All right? SFP, profit or loss, and statement of changes in equity. That is the purpose. It's to provide financial information about the financial position, which is in the SFP, statement of financial position, and then also financial performance, which is the statement of profit or loss. I have mentioned quite a few times that the statement of profit or loss has many different names as the years go. In second year, it's statement of changes in statement of comprehensive income. And then in third year, it's statement of financial performance. All right. And the cash flow statement, you will do in accounting 1B. So it's not that crazy. All right. Okay, so now all of these things of the entity have been reported: information, position, performance, flow, right? It needs to be useful. This information needs to be useful to the users who are making economic decisions, all right? These are examples of the users, okay? Once again, in your UJ slides, you're not missing out, right? Is everyone okay? Is everyone okay? Can I keep going? Great. Financial statements, these are the reports. So we spoke about general purpose financial reporting. Okay, do you see this heading? Right. Those reports are usually in the form of statements. Okay, these are your statements. All right, you can read up on that. Pretty simple. The SFP, statement of financial position, deals with assets, liability, equity. You need to know this, guys. All right? You need to know these principles. All right? Statement of profit or loss deals with your income and your expenses. Okay? Statement of changes in equity deals with capital and drawings. Statement of cash flows, once again, from historical period, it has been dealt with in semester 2. Apiwe, I see that your hand is up. You may unmute and ask your question. If not, you can just lower your hand. Okay. So I assume that there's no question. Okay, guys, and also please, guys, please mute your mics. All right. I'm continuing. Is everyone good up to this point? Have you finished reading this slide that's on the screen? I need more thumbs up, guys. I need more. I know there's not only 3 people in this class. Where's everyone else? There we go. Spam thumbs up in the chat. Okay, I'm continuing. Now, another very important subheading, which we will get to. And when I did accounting 1A, it was actually in my second semester test. Right? No, not second semester, but like, how do I say this? In the second semester. Yes, it was done in the second semester. Okay, so in accounting 1B. Who knows? Maybe they switched it up this year, but notes to the financial statements are essentially a disclosure of what, like, let's say if we have a note on machinery, we would write something like when it was bought, what it was worth at the time, the depreciation, so on and so forth, and then we would write the current value. So essentially, notes are telling us how we got to our final amount that is presented on the financial statement. So let's say if you're presenting your assets and you present machinery, your note needs to show why is that machinery was 10 million when we started the year, but now machinery is 15 million. You're going going to have to write in your notes, right? This is an example of what it does. This does not mean that this is how you must set it up. There is a very strict structure we will get to later, right? But essentially, you need to write what happened during the year to cause the value of machinery to increase from 10 million to 15 million. That's what the notes do. Okay, that's why they are called notes to the financial statements. Okay, lovely. Right? Financial statements provide us with information about the entity's assets, liabilities, equity, profit, loss, what is it called? Drawings, capital. That's what financial statements do for us. Okay, are we all good? Now we come to the reporting entity, reporting date, and reporting period. Right. Reporting entity is the entity that will be in your question. So let's say Focus Academy, Pty Ltd, has a 30 June year end. Focus Academy, reporting entity. 30 June year end, right, is the reporting period. 30 June is the reporting date. Does that make sense? Is anyone lost? We all good? Okay, there's a hand that has been raised. Okay, I think that was a mistake. Okay, Penina is not good. Okay, please repeat. Someone says makes sense. All right, I'll repeat it one more time. Okay, and also please read the definition along with my teaching, right? So that you can have more understanding. Maybe I am saying it in a way that is confusing you. Okay, but we have, when we're dealing with financial statements, we have three important concepts. Api, where you look stressed, don't worry, it's not tense yet. If you think this is bad, yeah, nah? Reporting entity, nah? Okay, you've raised your hand. Please unmute and ask your question. Everyone who've raised their hand, take turns. How can we
Good
help?
afternoon, sir.
How are you?
Good after. I'm good, and you?
I'm well, thank you. What is your question?
I've never attended any sessions, and I'm so lost. I'm trying to catch up, and I can't. I really can't.
Okay, no problem. You know what you must do now? I've also been sending announcements that you guys must read the conceptual framework before coming to class. But don't worry, recorded lessons are going to be provided and you will be all caught up. Okay.
Oh, okay.
Yes, don't
Thank you.
stress. Like even in UJ, at UJ, you're only probably gonna start learning this in your second lecture. So I'm just giving
Now,
you an extra boost. So don't worry too much. You're not lost and you're not left behind. Okay.
about that, it's like
Yeah.
I like to be forward,
Yes,
when I
yes,
just
yes.
arrive to my lecture and I really know a 50% of something.
Okay, okay, that makes sense. That is actually a good mindset to have, guys. If you manage your time well, please actually do pre-read your slides before going to class so that class makes more sense. Where will we find the recording? I will create a Google Drive link, which I will send to those who individually need them, and then I will grant you all access to view the videos for as long as you need them. Okay? Right. I'm going to repeat. I hope that while I was answering inquiries, you managed to read a bit. But I'm going to say this sentence to put everything into context. Okay, Tsegofatso, please unmute yourselves. Your hand is raised. You may ask your question.
Yes, yeah, I just wanted to ask. I do
Yes.
accounting A, and it seems
Sorry?
like this is a typo. I do accounting A, not accounting
Yeah.
1A. No
Yes.
classes for accounting A. So can I still attend these classes for 1A?
Yes, you can. Don't worry. I'm already working on a tutor for accounting A, as I've mentioned. They're going to start next week with the economics and econometric students. Okay. But for now, yes, just join, learn about the world of accounting. It's nothing crazy. Just an introduction, helping you guys defrost. Do you understand? Helping you guys get into the feel of things. There is no urgency needed here. Relax, ask as many questions as you need. All right. I hope that answers your question. Lovely. So now we are at reporting entity, reporting period, reporting date. Okay? Reporting entity. All right? Let me see. Let me actually do this. Let me do this for you guys. Because this is what I did yesterday when I was trying to teach everyone about reporting entity. Hopefully, it serves the same purpose today. I'm going to open assessment opportunity one, right? I'm going to show you the structure of a typical semester test. It's either called a semester test or assessment opportunity. Either or, it's the exact same thing. Okay? Keep in mind, we are talking about reporting entity, reporting period, and reporting date. Please keep that in mind. All right? So, this is a general structure of a semester test. Right? We go to the top. They will tell you question one, theory, conceptual framework. Do you see why I want you guys to ensure that you understand your theory early? In this paper, it was 30 marks for writing words. Right? In the future, when you're a second year, theory will be 15 marks. If you're lucky, 20 marks. Some of us even beg for theory in second year because it gets that deep. All right? But at this level, they're being kind. 30 marks theory. Learn your theory. All right? Someone said, please show me the format of cash flow, profit or loss. Yes. We will do that, right? We'll definitely get to that. If time allows, I will. I had not prepared them beforehand, but I'll make sure it's the first thing I present for tomorrow's class. Okay. So let me now continue. Is that okay with you? Just throw a thumbs up. I'm continuing. So let's get into it. Right? Question one. Okay? This question consists of two parts that are unrelated, right? While we're here, might as well just teach you exam technique. When you see a question like this, first thing you need to do is go to the required. Before you start reading instructions, whatever, or not instructions, before you start reading the scenario, go to the required. What does this question want? What does it want from you? Refer to the above relating to the purchase of the ice cream machine and answer the following. Okay? Briefly discuss what you understand under the following terms. So you've looked at this. This is a typical structure. Identify the element of financial statements the ice cream machine represents. The elements in this question, right, or the elements in general, are usually asset, liability, equity, right? That's what the elements usually are. The most popular one they will ask is either asset or liability at your level, unless they just decide that they don't like first years anymore and they want to make it something more intense. All right. And if you look at your conceptual framework slides, you will see how to apply these things. Okay. You will see that you will have to write that it is an asset. Why is it an asset? And then you apply the definition. An asset is a present economic resource. Okay. Then you will write an ice cream. The ice cream machine is a present economic resource. Okay. This is me being extra, but I hope you've also just been reading at how they would ask you theory, right? Can you see that the application of the asset by referring to the conceptual framework for financial reporting? Okay, there's a hand raised. I don't know if that was a mistake, but I will give you a chance. Please unmute yourself and ask the question.
Hello,
Hi, how are you?
And
I'm fine. I just wanted to ask you said and machinery it's what asset pre what?
Yes, a machinery is asset. It's an asset.
Assets.
Yes, and the
Okay.
definition, we're going to get to the definition. Present economic resource controlled by the entity as a result of past
Present
events. Sorry?
or is present
Yes, present economic
or
resource. Like present as in now. You know, like the future, the
yeah.
past, and the present.
Okay, thank you.
Not a problem. Okay, we're going to get to that definition. I think we have 25 minutes left, so I will try be quick. Okay? Is everyone okay with everything I've said up until now? Before I now go back to the reporting entity, reporting period, reporting date. Lovely. I do not see any thumbs down. Lovely. Don't be shy. Lovely. Okay. Right. Now we are reading the question. We are reading the question. Magnum Pty Ltd. Hereafter Magnum. Okay, there is a hand up. Please unmute your mic and ask your question. Okay, I think that might have been accidental, so I will continue. So we're starting again. Magnum Pty Ltd, hereafter Magnum, is a company that manufactures and distributes ice cream to individual customers and wholesalers. Now, reporting entity, Magnum. That's what reporting entity is. Right? Right? Great. Now, with this one, they don't give us, let me see if they gave us a year end. All right, here they haven't given us a year end. All right, they haven't given us year end. They haven't given us. So now we're going to move. Okay, but reporting date. Okay, in this case, I can give you reporting date. In this case, the reporting date would be the 28th of February. Okay, that would be the reporting date. That is the date by when the financial statements need to be complete. Okay, but I want to find a scenario in this paper where it is clearer to you which one is which. Okay, right now it's just the month of February, right? That also counts as a reporting period. Do you understand, guys? A reporting period is what are we preparing our statements based off of? Are we preparing our statements based off of the year, or are we doing it just for this month? Right? That is the period we are reporting at. And the reporting date is the date by which the reports need to be filed and ready for the users to make use of. Does that make sense, guys? Okay, I just want to look for thumbs down. Let me just switch the tab. Okay, there's those who say it doesn't make sense, right? I think I'm gonna have to move, guys. I really have to like get moving. So what I suggest, ask me in the private box, and I will probably send you a voice note or answer you clearer. All right, because I feel like you guys might be stressing. 1 March is the start of the month. Yeah, you see, that is perfect. Whoever said 1 month is the start of the month, yes. But listen, it would be if the reporting period ends February 2023, it means the year started, right? The year started 1 March 2022. Yesterday, I was asking you guys that when you see a year, like a period ending, if you see February 2023, make sure you know when the beginning of the month is. Okay, I just joined. Hope I catch up. Don't worry, lessons are recorded. I need to move, guys. We have been on this topic for quite a minute, but please ensure that read over the work, read over the conceptual framework slides, and then ask me questions afterwards. Okay, so that we can actually get some motion. Okay, cool. Can you guys see my screen? Okay.
It is not visible. No.
You can't see the screen.
Yes, we don't. We see nothing.
Okay, just hold on a second. Okay, you guys will let me know when you see it.
Yeah, it is visible now.
Perfect. Yeah. Okay, once again, I'm going to brush it. Reporting entity, the entity in question. They rarely even ask you the definitions of these things, but you need to understand what is what, right? We're moving. Qualitative characteristics of useful financial information. Okay, let's break it down. As users of financial information, We need that information to be useful, right? Useful is a key word. It needs to be useful to us. Okay? Great. So, as you can see, the opening line says for GPFR, which is general purpose financial reporting, information to be useful, the following information needs to the information needs to have the following qualitative characteristics. We have the fundamental qualitative characteristics and the enhancing qualitative characteristics. As you can see, they are all highlighted, or they are both rather highlighted in red. Okay? Fundamental qualitative characteristics. For first year, you need to know two, which are relevance, relevance, and faithful representation. Right? Great. For qualitative characteristic, for it to be fundamental, it needs to be relevant. What makes it relevant? What makes the information in our statements relevant? It should be able to predict future outcomes. Okay? So if we own a company, we need to be able to project the future through our statements. We need to be able to look at our statements and say, these statements are telling us that in the next 2 years, we are going to be bankrupt. Let's close our business. We can basically visualize this because our financial statements are predictive. That is an example of predictive value. Apiwe, your hand is raised. You may ask your question.
I don't see anything.
Is it just okay? Is it? Does everyone else? Are you experiencing the same thing? I think I advise you to leave the call and join again.
Oh, okay.
Yeah. If you're not seeing the screen, leave the call, join again. Siam Tanda, your hand is raised. You may ask your question. Okay, that might just be a
Sorry.
mistake. Yes,
No,
yes.
I wanted to ask if is this accounting 1A class or 100?
Both. It's both. Conceptual framework 101A. Both of you guys learn it. So you're meant to be here. Don't worry.
Okay, thank you, sir.
Yeah, lovely. No, don't stress. All right. So I shall continue. Okay. So does that make sense? That's how financial statements can be predictive. For them to be confirmatory, right? It provides feedbacks about our history, right? A financial statement presented in 2022 needs to make sure that it is built on the information from 2021. That's confirmatory. That confirms that the information, right? The information that we are seeing in 2022 is confirmed by the events that happened in 2021. Okay? Great. Faithful representation, which is the second fundamental qualitative characteristic. Guys, be honest. Do not cook the books. Don't change numbers around for your own benefit. That's basically what it means. Is everyone happy with fundamentals so I can do enhancing? Yeah, great. Thumbs up. I'm seeing a lot of thumbs up. Make me happy. Very lovely. Okay. Now we get to enhancing. Né? Enhancing qualitative characteristics, they are not compulsory, guys. They don't have to be there. That is why they are called enhancing. They just enhance the usefulness. Okay? They just enhance the usefulness. The word useful, you can see it's important. It's highlighted in yellow, it's highlighted in blue. They just enhance the usefulness of the information. Okay? The fundamental qualitative characteristics, these ones here, always have to be there. The enhancing ones don't have to be there. It would be nice to have them because they enhance. All right? Just like how with the bruise, most of us are ugly, but when we get a haircut, it enhances. All right? That's why the abbreviation here is called VCut, to help you remember that enhancing VCut. As a brew, you get a haircut to enhance. Do you get what I'm saying? You feel me? You feel me? Great. What does VCut stand for? V stands for verifiability. C stands for comparability. U stands for understandability, and T stands for timeliness. Okay? For us to enhance the usefulness of our statements, our statements need to be comparable to other entities. All right? That's one enhancing qualitative characteristics, right? Then it must be verifiable, all right? People who don't even stand to benefit from our statements should be able to verify the principles within these statements. They should be able to verify that the IASB used the conceptual framework to create inferences that are now present in these financial statements. That was basically me putting everything in a nutshell. Okay? Lovely. Understandability. Obviously, guys, you have to write the statements in understandable language. They should understand that 10 million is for revenue, right? 7 million is my expenses, okay? 25 million is my gross income. That's what makes statements understandable. You can't just write numbers. How am I going to understand what your statements are telling me? Okay? Is everyone good up to this far? And so that I can go on to timeliness? Okay, thumbs up. Great. I'm seeing an improvement. Great, great, great. I need more, guys. I'm seeing the same names over and over. Some of you guys are here. You muted my voice. Now you're on TikTok. No, man. Okay, I'm seeing different names. I'm happy. I need more, guys. I need more. Do you understand? Do you understand? Okay, that's good. Right. Timeliness. Right? For our statements to be timely, okay, you need to ensure that they relate to the current times you're dealing with. You cannot present a statement from 1982 when I need a statement for 2024. You cannot do that. That means your statement is not timely, meaning it has not been enhanced in terms of time. All right? It may be comparable, it may be verifiable, it may be even understandable. But if it's from 1982, get out of here. What are you doing? Okay? Great. So I hope we're all on the same page. We've got 12 minutes of this call. I want to at least get into the definitions. Tomorrow, I do not think I will be doing a recap. Tomorrow, we are starting straight from the definitions and application because that is, as you've seen, it is a 10-mark question. While it was a 10-mark question in our previous test, right? This year, it could be worth 15 marks. You never know. All right? The last bit of information that is not relevant and faithfully presented, it is not useful. For information to be useful, it must be relevant and faithfully presented. Like I told you, I don't care if you have enhancing characteristics. If the fundamental characteristics are not there, leave. We don't need you. Okay? Then the second bullet is information that is relevant and faithfully and if it's relevant but you lied and you wrote the expenses as 25 million when they were only 2 million, you're a liar. It's not fundamental, right? It's not what's called, it's not useful. They both need to be there, relevance and faithful representation, right? Info that is relevant and faithfully presented is useful, even if it doesn't have enhancing. As we said, we don't need a haircut, we don't need V-cut, we don't need enhancing, right? It makes us look better, but it doesn't make up who we are. Do you understand? I may be ugly on the outside, but trust me, I'm beautiful on the inside. Anyways, let's continue. Now, preparation of financial statements. Finally, guys, finally, can you see how it says going concern, accrual basis? If you were paying attention, the past paper that I showed you, right? These were questions that needed to be defined. Ensure that you know how to define them. All right? What is going concern? Going concern is basically the reporting entity, which is the company, presents their financial statements on the assumption that it is a going concern. What is a going concern? It means they have no intention to close down anytime soon. they see themselves operating in the foreseeable future. You understand? So when I create my statements for this year, I'm not gonna create statements if I know I'm not gonna be active next year. Why would I do that? Right? If I'm not a going concern, like last year I had a tuck shop business in Res. That business is not a going concern. It's not. Why? I only did it for 1 year and I decide, I know, man, I need to focus on other things. Right? So that business was not a going concern. But UJ is presenting its statements on the going. Yes, sir. Is this similar to GAP principles? It is exactly GAP principles, my good sir and or ma'am, because GAP is the generally accepted accounting principles. Right. So I'm glad that you are familiar with that. Okay. So it definitely is that. All right. Does everyone understand going concern before I go to accrual basis? GAP principles, don't worry about GAP principles. Do you understand? You don't need to go into them in depth. They will never ask you to define that. That is for FRAM A, right? Extended students who are doing FRAM need to know the GAP principles. For us, we start straight conceptual framework. All right. Someone said thumbs down. They don't understand what a going concern is. All right. Going concern basically means that a business creates its financial statements if they are a going concern. A going concern means that the business sees itself operating for the foreseeable future. They do not see themselves closing down anytime soon. All right? No, it's not a new chapter, it's just more definitions. Okay? Can I continue, guys? We have literally 7 minutes. Okay? Great. That is a going concern. The accrual basis of accounting. What is the accrual basis of accounting? This is now where it starts to get interesting. If you follow me in reading, it says the accrual basis of accounting. Can you please send this document? Yes, don't worry, text me afterwards. Accrual basis. Transactions, events are recorded in the period that they are incurred and earned, not necessarily when the money is paid. Okay? So now, think about it this way, guys. If I have a car company, okay, I am BMW. If you buy a car for me on credit, right, my car is worth 3 million, but you don't have 3 million in your pocket. I will let you take the car, right? It becomes yours, and I'm going to record that sale on the accrual basis of accounting. Meaning, I'm going to record the 3 million in my books, right, as a receivable. We will get to journal entries and you will know what a receivable is. But I am going to record you as a receivable in my books for 3 million because you took my car that is worth 3 million. Basically, what the accrual basis is saying is that I'm going to record the transaction even if I don't have all of the money. Does that make sense, guys? Even if you did not pay the whole 3 million, I'm going to record that a car was taken out for the value of 3 million. That is what the accrual basis of accounting is. Does that make sense, guys? Spam thumbs up. Yeah, okay, good. Up here, don't worry, man. Text me after the class. Please text me after the class. You're stressing yourself because you're going to learn this at UJ anyway. I'm just here for that head start. Next week, when they say accrual basis, you're going to say, oh, Kana, I was in that class. That's what it is. You're not missing out on anything. Don't stress. Okay? But basically, accrual in a nutshell is me recording the transaction even if I didn't get the money. That's the point. I didn't get that 3 million, but I'm going to write that a car worth 3 million has left my entity. I am expecting this money. That is why it is known as a receivable. If you owe money, on the other hand, let's say you owe money now. Let's say my company buys a machine on credit, right? I'm going to record that machine in my books because it is now mine while it is in my entity. So I'm going to write debit machinery, credit payables, right? Because I can't credit bank. No money left my bank. but I'm crediting payables because I am showing that I have a liability to pay. We accrual basis, yes, accrual basis is basically accrued, yes. Sorry, guys, I've been ignoring the chat box because there's so much time left. There's so little time left. Accrued is basically the same as accrual. Yes. So if it is an accrued expense, it means I am writing this expense even though there is no money connected. But a transaction or event has happened. Has happened. Do you understand? Yes. Which brings me to transaction slash event. Transactions or events need to be classified into categories, aka elements. So essentially, that's why when I say, if I say debit machine, if I say debit machine, you have to write SFP next to it because that machine is an asset. And where do assets belong? In the statement of financial position. Okay? We're actually going to start doing a bit more difficult work, guys. So please, I'm encouraging you, go and read the UJ slides so that we don't waste too much time on theory and we can actually get into using our calculators and really cracking our minds. Okay? What is the transaction? Exchange of goods or services. An event would be like an asset being destroyed in a fire. Someone said, let me see the chat. So where does the accrual basis, what do you mean? What does it fall under? These are just definitions, right? These are just definitions. All of them are part of the conceptual framework, I would say then. This is all part of conceptual framework information. Okay? Yes, I'm glad you get it. Right, accounting cycle, we know. We have the accounting equation, assets equals liabilities plus equity. All right, 2 minutes. In the 2 minutes, guys, tomorrow we're starting from here now. Please do not come to class if you haven't read the UJ slides. The UJ slides have everything, right? The UJ slides has everything that I have in this document. Make sure you cover the UJ slides, even cover assets, cover all of this stuff so that we don't waste too much time on recaps. And then I end up sending people 5 videos of me doing the same lesson over and over again. All right? Is that cool? Can we agree that we're going to do some pre-reading? Lovely. I like to see it. I will send them on the group. Don't worry. UJ slides will be sent on the group. Apparently, you guys have been sent them on Ulink. Please check your Ulink. We will start from here tomorrow. This is the screen you'll be seeing tomorrow. Né? The meeting is about to end. You guys are amazing. Thank you for staying throughout. You're actually boosting my confidence because you're making me feel like I'm not speaking gibberish. And the fact that you stayed shows that I'm making sense. Check Ulink for your UJ slides. There was an email sent that says that they sent you lecture one. But either way, I'll send you lecture one. The lecture one I have is the one from 2023. Okay? So don't stress too much. You'll have everything. You guys are the best. Have an amazing evening. I shall see you tomorrow. Sharp, sharp. You guys are amazing. Thank you. Bye. Shout out, shout out, shout out. Yes, it is similar, but you can't say what does a